Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host Joel Alcana, along with Brianna Valesky, and we have Henry Gambell on the line. He's vice president at Simpler Options. He's also the lead content provider for the firm. Henry, how you doing today?
Good morning, Joel. Doing quite well. Thank you for having me.
So, how did you get involved in the wacky financial markets?
Well, I actually have an interesting story in how I met John and how I kind of got to where I am now. I didn't really have much of a financial background at all, really. I was always very interested in investing and risk more than anything, but I actually met him doing in-home work through Geek Squad. I used to do in-home computer repair, and one day I happened to stumble across John's home, and I was like, what are you doing with 20 different monitors and so many computers? It was kind of odd to me. So we get on the topic of trading and gambling and so on and so forth. And next thing I know, I'm doing more work for him than I am for the company. And I guess the rest is history.
And you said you had a passion for gambling. Anything in particular that did you like to dabble in?
Well, I especially was a big fan of Texas Hold'em. I'd played it for years and had a couple different games that I would frequent. And I think that's really what kind of got John and I off on the same page, is because when we would start talking about that and kind of understanding what's going on with that, he's like, well, that's exactly what I'm doing, so why don't I show you it on a little bit bigger scale? So that was my
Probability,
primary,
right?
yeah, exactly, probabilities, and that was my primary game that I'd focused on, back then.
Okay, so then you moved. You got the initial relationship to John, and then you moved out. You're at Simpler Options, and you're the lead content provider. What kind of content do you put out?
Well, we primarily focus on options trading, and I try to gear it towards a perspective for people that maybe are a little bit newer to options, because it can be intimidating if you come from just a stock background or whatever it may be. So I try to focus on, beginner kind of content and just keeping things simple where, if you want to be long, what are your various options? What is the best way to define risk? And just giving people, ideas around that kind of thing.
Do you get in like to the exotic stuff, the butterflies, the iron condor, the credit call spreads, credit put spreads, or I guess you work at Simpler Options, so I guess you would I guess you're more have more of a penchant for just simple call and put buying, maybe call puts and put spreads.
Well, it's kind of an interesting topic because when you hear the name of the site, you'd obviously think, just like you're saying, put spreads and calls, that sort of thing. And that is kind of where my technical background came from, because when I would start working with John, and kind of what I think he is known for is his aggressive directional trading.
Hmm.
So that's kind of where I got my footing and, got a basis for the way that I like to trade. But as if with anything, you try to constantly progress. And I have found that, adding these things like butterflies and other certain strategies in particular situations can really give you an additional edge. So while I think there's a lot to be said for keeping it simple, I also think there's a lot to be said for embracing other strategies that, expand your horizons, limit your risk, maximize your upside. I think you don't want to, in a world as expansive as the financial markets, you don't want to be just a one-trick pony, I guess.
And also the big thing was options, and I'm sure you stress this with the beginners is the time decay and the timing of it, and a lot of money is made on the selling of options. Obviously, a retail trader got to have a pretty good size account. There's pretty good risk with it, but there's definitely something to be said for being on the selling end. And also we have Nick Shaheen on every Tuesday, and he does creates income with credit spreads. And a lot of times, what his strategy is a little bit different than yours. He tries to figure out where the market's not going and tries to book that.
Right.
Yeah, so that's another strategy. Okay, so your daily routine? What's on your radar for today? We got 4 minutes before the open, and I guess before I go into that, do you go weeklies? Do you trade the monthlies? Do you try and go out 6 months in a position? Leaps? Where do you find you're doing
Well,
your most options
I
trading?
def- I definitely won't trade leaps because I feel finding the direction for a market that far out is just very difficult, and I never would buy them, and selling them that far out is a little tricky. But other than that, I'm willing to trade pretty much any expiration. I'll go as far out as 100 days or as short as a weekly contract. It just depends on the situation. So, like for this morning where we're getting started, the first couple of things that I'm looking at today are the results from AMBA off of earnings.
Oh,
So we
okay.
did set up and I guess that's an example too, where obviously in front of earnings you're not going to do a directional call or something like that. So incorporating butterflies and incorporating, iron butterflies, especially for muted moves, I think that's an excellent way to take, what would be an advanced strategy from a short straddle and then introducing it to beginners to say, hey, most of the time earnings moves are kind of muted and you want to take advantage of that volatility. How do you do that? Well, that's one way. And what we've done with it yesterday is just on a small bullish butterfly, trying to land it up there kind of at the expected move. And that's where I'll be getting my day started. As far as the other things that I think will unfold here in the next, I always try to think in terms of expirations. So, because like the AMBA trade, that's a weekly one. But in the back of my mind, I'm thinking June expiration is on the horizon. So where might I set up trades for that? I think Netflix is good to gear up for the potential into new highs. I think that will piggyback off of the NASDAQ if it can do the same. And, those are some of the big tickers I guess I'm looking for. On a smaller scale, I also have been tracking JD a lot, which I think is a really good pattern and looking for it to move substantially higher.
Could you walk us through the AMBA trade that you have on?
Yeah, absolutely. So I'll show you. Well, I can't show you, but I can talk you through them.
Okay.
So the two of them that I put on, and this is a good example too of talking about the various expirations. So for the immediate expiration, I've done the balanced butterfly at the 97, 100, 103 strike. So this morning, AMBA is opening up around 95. I paid 35 cents for the spread. So I like to give it about 5 minutes to open, see if we can close above that opening range, and then ideally we can grind into 100. If we can do that, then that's where obviously the spread is the most profitable. But I really have to take that one off today because it's the short-term, weekly expiration, and the main thing I'm looking for there is just the IV crush. And the other way that I played it is going out further into the June monthlies because the thought process was, well, if they can do well off earnings, the expected move into June expiration is about $7 or $8. So if it can, kind of gravitate towards the psychological level of 100, there I've put on the 95, 100, 105. So I like those types of spreads because, for the further dated one, I paid 65 cents and it has a max profit of $4.35. I think those types of situations are much more forgiving than trying to buy a directional call for $6. I mean, just the risk reward is so much better with those types of plays. I've got short term and long term exposure. I think that's a great way to try and structure it.
Okay. All right. What else? I mean, do you look for things to short as well? Play the market from both sides?
Absolutely. I and this is because we talk about this a lot in the chat room where it's like I'm not a diehard bull. I am not a diehard bear. I'm a trend trader. So I do the very best I can to stick with the trend. Of course, the most recent problem is everything has just been straight up. So most of my positions as of late, or at least the ones where I've been making money, have all been bullish. My bearish candidates, kind of the same thing where I look for these psychological levels. So like for Chipotle, for example, it's trading 610 right now, and 600 is well within its range for the June expiration. So I like things like broken wing butterflies and just essentially strategies where, if the underlying does pin, you can do really well with it. If it just collapses, well, you're not going to lose any money to the downside. And then your risk is defined by the number of contracts you take, the debit you pay, to get in. But that's one that I've got on right now to the short side.
What?
I'm also looking for crude to roll over, but that one hasn't really been cooperating.
Which one's that?
Crude oil, I'm looking for lower prices there, but yesterday it kind of threw a kink into that pattern, so I'm having to keep a close eye on it.
How do you trade that? You trade that via options on the USO?
I will, and the way that I like to, especially because in my mind, I'm looking for USO to go down and make new lows. So what I've been trying to do is structure it to where you're selling the front month call credit spreads and then doing the next month out for your puts. And that's just a nice structure where you can have, theta decay where you're going to get it the best, buying the premium with a, time in your favor, and then trying to catch the move, of course. That's the way I like doing that because you can relax a little bit in the trade as opposed to just having straight up directional puts.
Do you pay much attention to the charts?
I love charts. That's one of my primary places of focus. So I'll use, one of the signals that I got from John was the squeeze. And I found that to be a very good technical indicator. And then I tried to tie that in with Fibonacci work. And I found the two to be a very good confluence for technical analysis.
Okay. Are you much into like double tops, double bottoms, triple bottom, multiple closes in the same area? pattern
Not
trading?
really.
No.
I mean, I think that type of analysis does have some merit to it, but sometimes I feel like those things are just so common. I don't know. I just haven't found them to be terribly useful in real life situations, but that's just the nature of how I trade.
Okay. All right. Uh, do you follow the markets like 24 hour, like the S&Ps? They trade, on a global basis. Do you pay attention to that, or you just try and save your energy and focus intraday?
I try not to not focus on the futures markets too much. I mean, there'll be some situations, especially when we, have these signals like the squeezes and other things that we think will have bigger than expected moves. In some of those situations, when I have those setups, I'll look to the futures market. But as a general rule, I really like focusing on just options because, when the cash markets close, you can kind of recoup mentally. And then when you get started the next day, you're ready to go. The other thing that I like about options is that it's so easy to define your risk. With futures, you can get a lot of slippage. The overnight session can be illiquid. And I just kind of like, avoiding that when I can, then focusing on the liquid options markets when they're open.
Do you mess in any like the big cap stocks like an Apple?
I love trading them. I think Apple has been a little tricky to trade since the split. It was a lot more fun to trade when it was up around 650 or so, and also it was much easier for those penny stock strategies. Since it's split, I mean, it's almost kind of like the rest of the market where it's really just been trading sideways. From a big long-term perspective, I love Apple, but I've also learned to ignore kind of opinions like, oh, well, I like the company. Well, to me, that doesn't matter. What is the chart telling you? Because, the market's obviously very good at pricing this type of stuff in. So let the chart tell you what to do. Ignore, kind of your personal opinion on that stuff.
Do you do anything directional with the overall market, like the spiders or S&P, anything like that? OEX, you dabble in that?
That kind of goes back to what I was saying, how for the past, month or two, I haven't been doing a lot there. There will be times when I do because, it's moving, but the past several weeks I've just avoided the stock indexes, the primary stock indexes, just because they've been so sideways. Um, if you're, and if you're timing it, those times that we have the spike in the VIX, then I think you can sell premium in them. But other than that, trading the indexes directionally has just been, I think it's been a place to avoid.
A lot of competition, right?
Yeah, a lot of competition, and it's just, there again, if you want to do things like wide iron condors, like you were discussing with one of your previous guests, that's a great strategy for some people. As I try to help people that are a little newer to this, a lot of times we don't use strategies like that because I don't like situations where if you have a big gap against you, those positions can lose a lot more than they stand to gain. So I try to think from the flip side of that. How can I have the least amount of risk with the best, max gain? But, that's what's so magical about the markets is everybody can kind of trade it how it fits their personality.
Do you follow the foreign currencies at all? We have one of our Sheldon McIntyre in the chat room asking if you have any view on the yen.
I do, and the yen is something that we've been trading in our chat room for the past 3 months at least, and I think it's going to go lower. I think that there is no reason to fight that move. Now, is this the place to get short? Not really. There again, going back to kind of the fib work that we use, we've almost made a major extension to the downside. So at any point, the yen could have a blistering short covering rally. So obviously, you don't want to be on the wrong side of that. What I love doing with those charts, and especially if you can find a good trending market like a currency, go back to your daily chart and look at the rally that preceded the decline. And if I can find a symmetrical move inside that, those are some of the first areas that I'll start looking for resistance in the yen. And then I think you can start initiating fresh positions on it.
What's the ETF that you follow in the yen?
FXY?
Oh, there you go. I pulled. I don't know what I was thinking there. FXY.
Yeah, it's not the best. I mean, it's a little illiquid as well. But what I like doing with those is where if you'll have those levels like symmetry or 618 retracements, whatever it is you use, try to initiate those put positions as FXY is being bid, as it's moving up. Because with those illiquid spreads, you don't want to jump in and pay the asking price. So if you'll have your level, try to get in a little closer to the bid. That's what gives you an edge with those illiquid spreads. And then when the yen has its, 75 or 1% down days, that type of thing, that's when you're on the favorable side of it. Doesn't always work out perfect, but It's at least a concept I try to share anytime I talk about FXY, because you don't want to be lackadaisical with those illiquid spreads.
Yeah, I mean this one had the big drop and then the long consolidation November through April. Then you just had another drop, not quite as big here. Wonder if I will get another consolidation period here. Before I let you go, Henry, who should trade options? I mean, what? I mean, it's people that have established stock accounts, stock portfolios, retired people. Much money do you need to get started, and who should get involved in the options markets?
Well, obviously I have somewhat of a biased opinion, but I think everyone should be in the options market to some degree. And of course, you can start with as little as, I think Thinkorswim will allow you to start with $2,500. That's not going to be life-changing money. But if you're trying to get your feet wet with this stuff, there's nothing wrong with trading a one lot. Protect your capital, get your footing, and then you can start deciding if it's truly for you and start stepping up your risk. But I think if you're just trading stock, I think it's foolish to not be at least selling some calls against it or doing something to help, finance those positions. So if you're in the markets at all, I think it's worth it to learn at least a little bit about options and start small. If it works out good for you, then of course you can pursue that. But I think you at least would want to check it out.
Okay, Henry Gambell, Vice President at Simpler Options. He's also the lead content provider, giving us his take on the options markets, technical analysis. Thanks a lot, Henry. Great interview, and we hope to have you back on again soon.
Thanks, Joel. I really